The Nifty is up about 26 odd points. The Sensex is up almost 100 points.
But it's just lacking that momentum over the last couple of days.
43,500 level is a very crucial one on the Nifty Bank. It's stuck in that range of 43,500 to 44,000.
Around 19,800, around where we left off yesterday. So nothing at all really to talk about. The levels all remain the same, both on the upside and downside. The Bank Nifty's got about 1/3%, and the Nifty's got nothing. 5-point change as of today.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the headlines for this evening. Sensex and Nifty end flat after a range-bound session. Broader market outperforms. Nifty mid-cap index hit another intraday record high. Nifty Bank gains over 120 points. Nifty Pharma Index snaps the 6-day gaining streak, falls the most among sectoral indices. Mamaearth brand owner Honasa consumer stock hits the upper trading limit on the back of better than expected margins and higher advertising efficiency and operating leverage. The company expects to grow 30% in the second half with improving margins. UltraTech is eyeing Kesoram cement assets. Sources say due diligence is currently underway. Both UltraTech and Kesoram yet to respond to CNBC-TV18's queries. The USFDA issues a warning letter for Cipla's Pithampur unit, citing data integrity issues and repeat observations, and suggests the engagement of third-party consultants to resolve the matter. The stock slides. Bajaj Auto hits a record high. Analysts revise outlook after MD Rajiv Bajaj says the company is firing on all cylinders, two-wheelers, three-wheelers and EVs, and sees exports picking up. TVS Motors also gains after partnering with Min Long Motor to enter the Vietnam market. And here's the lineup of what we have in store for you. In Market Opinion, we have veteran market expert Mark Mobius and Gautam Shah, founder and chief strategist at Goldilocks Premium Research. In Big Corporate Voices, we have Varun Alak, chairman of Honasa Consumer. To the first headline of the day and the day's market action as well. Sensex and Nifty ended flat after a range-bound session, marginally in the red. Nifty Bank Index managed to end in the green. The mid-cap index hit yet another intraday high in trade before ending flat. Prashant Nair is here to wrap the market action. Prashant.
Absolutely ranged kind of day. If you were looking for action on the Nifty, you wouldn't find it because there wasn't any. Flat close on the Nifty. Bank Nifty, which has been the weaker of the two indices, ending about 1/3% higher. Broader markets, Nifty and small cap and mid cap indices, opposite of yesterday. Mid caps flat, small caps recovering some of yesterday's 1.25% cut. Sort of in terms of Nifty movers, auto stocks did well. Bajaj, of course, we had that interview. The market actually paying a fair bit of attention to it. Both stocks were higher. On the downside, there was Cipla, which was sharply saw a sharp cut on the back of news flow there. In the broader market, it was 1:1 in terms of advances and declines and lots of movers. Oil marketing companies are having a fantastic month, fantastic November. HPCL is up 30%. It was a top gainer today. Yes Bank, EID, Parry, actually sugar names doing very well like Dalmia Sugar, Avard Sugar, etc. Honasa locked up 20% after a good set of results. Indiabulls Real Estate doing well. Sequent Scientific. There was Praj Industries. ABFRL has been on the other end of the spectrum in the retail category. On the other, of course, the big winner has been Trent here. But ABFRL coming up about 5.5. Suntech Real Estate, Snowman Logistics and Senco Gold doing well. On the losing side, you had Persistent Systems. A lot of this was basically pullbacks after the last 2 days of rallies here. Home First, rate gain was down sharply 8%. Recent QIP, there was Naukri, which was down. Lal Path Labs, Carborundum, Shanti Gears, Stovecraft, a few others. The Nifty remains range-bound. We've been sort of talking about this. There's no US market trading because, of course, bond and stock markets there are closed for Thanksgiving. And we come back in that sense without that handoff from Wall Street. Nifty's been range-bound, and we need to break out of this range to get all-time highs in sight. And Bank Nifty needs closer watching because that's been struggling for some time now. Back to you.
It has been and has been in a range. Thank you, Prashant, for joining us with all those details. Let's get you some market opinion now. Gautam Shah, the founder and chief strategist at Goldilocks Premium Research, is betting on themes like sugar, fertilizer, insurance, auto, among others. He says that's where the money and wealth is being created. Also adds that the Indian market is currently driven by domestic liquidity.
I think one has to play themes. One has to just forget the Nifty and the Bank Nifty, play themes, sugar, fertilizer, insurance, auto ancillary, infra, PSU. I think that's where money and wealth is being made, and that's where one should focus on. IT, pharma, auto, and PSU, which continues to be an existing theme, I feel would be the star performers between now and, say, May 24. On the downside, very clearly, 19,450, 500 has become a short-term base. So till we are above this number, I think the bulls have some control over the market. So I think that could be used as a trailing stop loss for traders or for positional investors. Unlike 2003, 2007, when the markets got into a corrective phase, what happened was everything fell for the time being because the Indian markets was driven by foreign money. And now because it is driven by domestic liquidity and domestic money, sticky money, what's happening is that wherever any pocket turns overbought, it goes through a correction just for the short term, but whereas the other part of the market is strong.
Okay, all right. On that note, let's get you some more market opinion. Veteran investor Mark Mobius believes that India will be a beneficiary of the slowdown in China. Mobius has recently announced that he's stepping back from his investment firm after being at the helm for over 3 decades. Speaking to CNBC-TV18, Mobius said he's not concerned about valuations in India and believes that many companies offer a high return on investment. That's a CNBC-TV18 exclusive.
Flows of money coming into India have been quite substantial and are increasing. And that includes not only portfolio investment, but also private investment. So India is going to be getting a lot of money that normally would have gone to China. What we focus on is not necessarily the price-earnings ratio or the price-to-book value ratio, but we're looking at return on investment. And it's amazing when we do scans of the Indian market, how many companies have a high return on investment, which is a good indicator of growth prospects, because if you have a high return on investment, you have a lot of money to reinvest.
Okay, India benefits from Chinese market slowdown. That's the word coming in from Mark Mobius. Moving on to the second headline now. Honasa consumer hit 20% upper circuit after the company reported a robust second quarter number. Net profit doubled to 30 crore rupees on quarterly basis. Mangnam Malu joins in with all the details. Mangnam, what worked for Honasa consumer in this quarter?
Well, that's right. Mamaearth parent Honasa saw its shares rise almost 20% in today's trading session. From its issue price, it's up nearly 25%, and from the post-listing lows, it's up 65%. Good results were expected. The company reported good results as well. 21% jump in their revenue, and the EBITDA jumped by over 50%. That means a margin expansion in excess of 150 basis points. Even if you account for the one-off in their margins, there was an expansion of 70 basis points, and that's what the street liked. The net profit on a low base nearly doubled to closer to 30 crores versus 15 odd crores. The underlying internals were strong as well, with 27% volume growth and 265 basis points ad spends realization in the first half of this year. The management commentary to CNBC-TV18 was rather positive as well, where they said that they are looking at 30% plus sort of growth coming by in the next couple of quarters, with more scope for margin expansion. And Jefferies upped their estimates by 5 to 6% for FY24 on the EBITDA and net profit, and as a result of which, them having initiated coverage in the stock just a couple of days ago with a target price of 520 has been increased to 530. So overall, benefits for Mamaearth.
We clearly see that as brands grow in scale, and there are structural efficiencies which come across marketing and the leverage that comes in, because as the brand awareness increases and the need for similar level marketing decreases, then in percentage it keeps going down. From a medium and long-term perspective, I think our endeavor would be to keep looking for more opportunities on how, while we continue to grow faster than the market, and how we can find more opportunities of efficiency and leverage. Sort of expanding in offline. And we currently, of course, about 35% of our revenues come from offline. And it is amongst the fastest growing channels for us. And we're there in only about 150,000 stores in the country. Priority for us when we see any consumer white space, is to still attack it organically by actually crafting our own brands.
Okay, all right. That's about Honasa. The stock is locked in upper circuit today. The third headline now, a CNBC-TV18 exclusive, that is, Kesoram Industries gained close to 5%. We learned from sources that UltraTech Cement is interested in the company's cement assets. Both UltraTech and Kesoram are yet to respond to CNBC-TV18's queries. Vivek is joining us to tell us more. Vivek, tell us, what are you picking up from your sources?
Well, the cement industry has seen quite a lot of interesting M&A activity in the past couple of years. Sources indicate that UltraTech Cement is now on the prowl to go ahead and acquire an interesting asset. The company that we are talking about is Kesoram Industries, and we understand that UltraTech Cement has already evinced interest to buy the cement assets of Kesoram Industries. Sources indicate that UltraTech Cement is currently undertaking due diligence of the cement assets of Kesoram Industries. UltraTech Cement has a couple of options on the table, exploring both buying out an existing promoter or also buying out just the cement business. Remember, Kesoram Industries is a cement company that has presence in and capacity in Karnataka as well as Telangana. Total installed capacity of the company is close to 10 million tons per annum. The company operates both in the cement as well as the rayon business segment. Now, talking about the shareholding pattern of Kesoram Industries, it's very interesting because KM Birla Group companies already have a stake in this particular company. When you're talking about the Birla Group holding Pilani Investments, they have close to 14.9% stake in the company. Century Textiles has close to 2.4% stake in the company, and this is out of the total promoter holding of over 43%. We reached out to both UltraTech Cement as well as Kesoram Industries. We are yet to receive a response from both of the companies on this particular development that we are tracking here at CNBC-TV18.
Okay, thank you so much for all those details, Vivek. In fact, Nigel D'Souza is standing by with more on Kesoram Industries. Nigel, what would the key concerns be in this case?
Well, that's right. Let's do a quick analysis then on Kesoram Industries. First of all, in the last 1 month, the stock is up close to around 50%. So it seems the street was anticipating some kind of corporate action. Next up, what is the problem with Kesoram Industries? Well, they have a debt of close to around 17 to around 1800 crores, and the cost of borrowing, that's the cost they pay on the debt that they have, is nearly around 18 to around 19% odd. What works for Kesoram Industries though? Valuation-wise, well, it trades at around $65 per ton. So even after this 50% run, well, because the debt is such a large proportion of the enterprise value, that's why it still trades attractive at around $65 per ton. And you normally compare it with what's the cost of setting up, a cement unit on a per ton basis. That's the replacement cost. Replacement cost in cement is close to around $100 per ton. So in case there's a deal, well, maybe in fact there could be some more upside going by what it trades at current valuations. What should you track from here on? Well, the current promoter entity has close to around 43%, but Mr. Birla, KM Birla, he has roughly around 16-17% odd. So how do they structure this deal is going to be very, very important if in case there is a deal. Valuations of the deal as well will be very, very important. As of now, it trades at around $65 per ton, and the stream seems to be expecting that if a deal is struck, it happens at a higher price. So let's see how that goes out there. And also what happens to the smaller part of their business, that's the rayons as well as the chemicals unit. How does it help UltraTech Cement though if they go ahead and acquire this asset? Well, they move towards the 200 million tons that they have been talking about. So that's point number one. And the second factor, since Kesoram Industries sells bulk of the cement that they produce in West as well as South India, well, UltraTech Cement gets a better market share in both those two markets. So let's see whether or not this deal gets closed out. But the quantums of the deal will be very, very important.
Absolutely, they will be. Nigel, thank you so much for joining us. Let's take a short break. We'll be back with the other headlines on the other side in just a bit. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's talk about the fourth headline that we are tracking today. Cipla fell nearly 8% after the United States Food and Drug Administration, or the USFDA, issued a warning letter for the pharma major's Pithampur unit. We got the details. It spoke about the underlying data integrity issues embedded with product complaints and contamination at its Pithampur unit as well. Vivek Iyer is joining us with all the details on this one. Vivek.
Well, absolutely right. So Cipla slumping in today's trading session. Remember, November 18, the company did indicate to the exchanges that they had received a warning letter from the USFDA. This is for the Pithampur facility. Now, just looking at the quick timeline of how exactly events have transpired as far as Pithampur is concerned. February 2023, the USFDA inspected the facility, issued a Form 483 with 8 observations. The observations were quite serious in nature. And in August 2023, the USFDA classified this particular facility under an OAI, or an Official Action Indicated status. After this, most of the analysts did start penciling in that this particular facility could be upgraded to a warning letter status, and which is exactly how it has transpired. Now, what is fresh is that, CNBC-TV18 has managed to access the warning letter, that the USFDA has sent to Cipla. And in this, the key highlights are that, number one, the USFDA has spoken about data integrity issues, within this particular facility. The second point is they have mentioned similar and repeat observations at the Goa site. Now, remember, two facilities of Cipla, both Goa as well as Pithampur, is under the warning letter status. And along with that, the USFDA has asked the company to go ahead and take help of a third-party auditor or third-party consultant to help address the issues it is facing as far as Pithampur is concerned. How does it impact the company? Post this particular Form 483, analysts had started penciling in that there could be delays of launches that could be pushed out to FY25. So generic Advair and generic Abraxane, both of these product launches are likely to be pushed to FY25.
Okay, all right, Vivek, thank you so much for joining us. So that's Cipla down 8% in trade today. It's a big negative that has come by for the company. Moving on to the fifth headline now. Bajaj Auto hit a record high today, gaining 3%. This after a positive commentary coming in from Rajesh Bajaj, the MD of the company. He said the company hopes to launch the world's first CNG two-wheeler in 2025. Morgan Stanley has put out a bullish note on Bajaj Auto. The brokerage firm is overweight on the stock with a target price of over 6,200 rupees per share. Better than expected Triumph sales, strong ramp-up in the Chetak EV segment and a ramp-up in production and distribution are all positive factors for the company. Gautam Shah of Goldilocks Premium Research is also bullish on Bajaj Auto. He says the stock has been a strong performer.
I think even currently, if you see, there are certain stocks which still stand out. While Bajaj Auto has clearly been the star performer, I just get the feeling that some newer stocks might join the party. So a Maruti can do very, very well from here. A Hero Moto seems to be coming out of 12-15 months of underperformance. That's a stock, which could potentially be a dark horse over the next 6 to 12 months.
Okay, that is Gautam Shah's view on the auto space and specific stocks. But let's stay with the auto space. TVS Motors has announced its entry into Vietnam in collaboration with Min Long Motors. This will be the bike maker's second major global foray in 2 weeks. Sonia is joining us now with the details. Sonia, tell us more about this.
Thanks a lot for that. TVS Motor hit a fresh record high in trade. In fact, the stock is up 60% in 2023 and the market cap of TVS Motor has now hit 82,000 crores. Now, TVS is expanding its global presence. Yesterday, the company announced that they will be entering the Vietnam market. They will launch a range of two-wheelers. Not just that, a couple of days ago, TVS Motor announced that they would be entering the European market and start with France as well. The exports of the business are currently 25% of the overall business, and the plan is to increase it further. In fact, the EBITDA per vehicle has also been rising because of higher exports, and now the company has reported record high margins in the quarter gone by at 11.1%. In fact, brokerages are also very bullish on TVS Motor. UBS has a buy with a target price of 1,900, while Jefferies has a buy with a target price raised to 2,000 rupees.
Okay, that is about TVS Motors. To some more stock-specific news now. CE Infosystems, operator of Mapma India, declined in trade today. The company boards may consider raising funds via qualified institutional placement or a preferential issue. Rima Tendulkar joins us now. Rima, tell us more. The stock came off the day's high towards the end.
Thanks so much for that. So the board meets on Monday, 27th of November, where they will consider a fundraise via a QIP or a preferential issue. Now, the company already has cash in the books of close to about 500 crore rupees as of September end. Now, maybe one of the reasons for the fundraise could be M&A, maybe some growth capital. The company is guided for a full year revenue growth of 40%. Now, in the first half of the year, the company has achieved a top line growth of about 28%. So typically, H2 is much stronger for the company, and therefore the company did, in their last interaction with us about a month back, say that they seem to be on track to achieve that 40% kind of growth for the year. But the stock is done well. It's year to date, it's up more than 100%, 116%, and the stock has hit a fresh high.
All right, that is CE Infosystems, came off from that fresh high levels that we saw earlier. Now, Raymond has lost 1,500 crore rupees in market cap over the last 7 days as promoter MD Gautam Singhania and wife and board member Nawaz Modi Singhania are embroiled in a public divorce battle. Hetal Dalal, President CEO at Institutional Investor Advisory Services, says that Raymond's board needs to communicate to the investors that management is under control. She adds that the board should conduct an independent investigation on the matter. Take a look.
I think now that has begun to impact the stock price, it is incumbent upon the board to provide clarity on what is the way forward and what they are seeing. See, at a very basic, the board now needs to at least provide some kind of assurance to shareholders that despite all of this happening, the company is still under reasonable control. Being silent is no longer going to help. So I would argue that at this stage, given that all of this has become public, Nawaz Modi's gone public with these accusations, it has impacted the stock price. It is all the more incumbent upon the board to articulate what it has done in terms of an action and allay some of the fears that the market seems to have given this entire acrimonious situation. See, I mean, ideally, if you look at the situation, the board should run an independent investigation. It should ascertain what the facts are, whether, what Nawaz Modi is now talking about, there are legs to it and there is a factual basis for all of it, what actually transpired. Based on that, they have to then decide what is the course of action. But I do agree that given the current situation, there is likely to be a concern in terms of the efficacy and smoothness with which the board will function or board meetings will be conducted and function. So I think this is far more complicated in terms of, it's not isolated in terms of saying that this is a domestic matter. It's clearly reached the company and both of them are on the board. So therefore, the board needs to step in.
Okay, that's the word coming in from Hetal Dalal on the Raymond saga. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.